The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the January 15th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything in our power to have an extraordinary day. And of course, let's always remember that what's talked about is a dream. What's envisioned, well, it's just simply darn right exciting. Of course, what's planned becomes possible, but the most important thing is to schedule it, because what's scheduled is real. And I want to thank you for scheduling your time with me this morning. I am here to serve you. I am grateful for your presence. So go ahead, pick up that phone, give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. That way you and I, we can go hunting for bulls and bears. They're out there, so we can go on a safari together. Remember, if you've got a question, someone else has got that exact same question, so don't do it for me. Don't do it for yourself. Do it for someone else. A random act of kindness. That is the way to kick off your terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. Dow is off about 59 points, trading out at 17,374. S&P is down about 8, trading at 2,003 and change. Composite off 33 points at 4606. Russell 2000 down 13 points, trading out at 1163. The DAX, on the other hand, is up 201 points, up towards its session high, if not at its session high. So money fleeing into the stock market. The FTSE is up 60. I wouldn't say fleeing, but it's moving into the stock market. The FTSE up 65 bucks as we speak. Goldilocks up 26. She's trading at 1260. Silver now getting in the game, up 16 pennies, trading out at 1715. Light sweet crude down 27 cents. It cannot handle the higher U.S. dollar index out here. So she's off 29 cents as we speak. Has put in a very short-term bottom. We'll see whether or not that holds. It's not going to hold if the U.S. dollar index continues to move higher. You've got the euro, U.S. dollar up against some significant areas of well, let's just say if it doesn't hold the area that it's trading into right now, it's got a lot lower to go. That's what's going on inside that currency pair. Of course, we had the Swiss bank, the Swiss bank, go ahead and unpeg their currency pair to the euro. That's at currency markets in a tizzy. Currency, dislocation inside currency markets, never a good thing for stock markets. Currency markets are what rule the world out here. The euro Japanese yen moving down in a big way out here. As far as things moving to the upside, you've got, along with gold, you've got Rand gold. That's the biggest dollar mover. That's up 6% this morning, up $4.74. You've got Nestle's, the chocolate maker. Of course, Nestle also has that water out there, right? But I hope you don't buy Nestle's water. That never makes sense to me. In any event, you got Shire PLC. That's up $3. You've got Marlin Midstream Partners. That's up 16%, up 270. Target is up 240. I saw something posted in the den said that Target's going to close their Canadian operations. 133 stores out there. So good news for the way the stock market is taking it. A different story in the case of Best Buy. That's off 15% this morning. Regenerate Pharmaceuticals down about $6. You've got Priceline now off 15. Bluebird Biotech, BLUE, down about 5%, off $5. Zillow down $3.78. Receptos off $4.74. Domino's Pizza down $3. How could Domino's Pizza be off? We just had that great football game on Monday between Oregon and Ohio State University. We got a Super Bowl coming. How can Domino's Pizza be trading to the downside? Nonetheless, they are. So we'll take a look at that. Let me see inside the den here. Steve, surf is up. Okay, go. Okay. In any event, let's go take a look at the market here. So you got the market is off $34. Let's start by taking a look at the ETF structures out here. So let's start off. We'll look at the Dow Diamonds, see what message we had from yesterday's market, see what we've got from today's market. With regard to the Dow Diamonds, they're trading right now at 173.75. What the Dow did yesterday, it got down to a low of 172.42. 10 cents away from the actual low of January 6th out there. Volume yesterday, however, was 11 million shares, and that's going into the swing point low that had 10 million shares. So you're moving into a swing point low with volume. You're still trading inside that candle. Our expectation should be as long as the diamonds are trading inside that January 6th candle is that the low is going to be tested. If those lows get broken out, the lows will go down and they'll test the December 16th area. Now, that's got just slightly more volume, 12.2 million shares. So price moving into that area yesterday with a little bit lighter volume. But the first test is going to be this 172.32, or a rejection of that swing point, which would be a close above 175.54. That's what's going on inside of the diamonds. If we take a look at the SPY, the SPY, right now she's trading out at 199.99. How about that? Agent 99 from Get Smart out here. So let's go see if we can get smart. What is the, let me pull this back here and get even a little bit smarter. What do we know about the S&P, the SPY out here? Well, if we take a look at that swing point from January 6th, we know it had 209 million shares. Yesterday, the move down, 192. The low was tested. So inside the SPY, we actually had a swing point low tested with lighter volume. Again, yesterday's volume 192, that was going against 209 million shares out there. So we have a rejection inside the SPY of its swing point with lighter volume. The SPY does not have to get back down there and test that again. The SPY is still trading inside that swing point. The swing point high on January 6th is 198.85. It's also still trading inside the swing point from December 16th. That had 259 million shares. That low has not been tested. As long as the SPY is going to trade with inside the January 6th swing point, that says that really its next test ought to be a spike down into the low of 197.86. If it can do that and do it with less than 259 million, we'll have had, in essence, two swing points that have been tested with light volume. At this stage of the game, just really, trading somewhat sideways, to lower out there. That's what's going on inside of the SPY. Excuse me, if we take a look at the QQQ ETF, right now the Qs, they're trading out at 100.29. They're trading right down into their TAS market profile support level. So right into that number. That number, by the way, is 100.18. You're trading at 100.29 as we speak. What did the Qs do yesterday? Well, they didn't get down and test the low of January 6th. That low, by the way, is priced out at 99.62. Volume was 66 million shares, but yesterday the move down light volume, 51 million shares. We're still trading inside this level, inside this area, and that means that the top is 101.75. A complete rejection is a close above 101.75. If you don't see that, what we're likely to see is a test of 99.62 and or a test of 98, what is it? Come on, where is it? Where is it? Give me that. 99.92. 99.92. So that would be the target, at least the initial target here for the Qs. By the way, volume so far today, we've been trading for 45 minutes. The volume here is 13 million shares. Yesterday, it was 51 million shares, but a lot of volume in the first hour of trading. Let's go take a look at the IWM. What is the IWM doing as we speak right now? Again, trading inside its January 6th swing point. That volume was 67 million shares. Yesterday's volume, 34 million shares. Boy, if the IWM is telling you that it doesn't want to go bust out its lows, unfortunately, though, the IWM is still trading inside that swing point. So it's really telling you, hey, I'm down with light volume, but you're still inside the January 6th range. The range is 117.77 to 114.36. It may not have the volume to bust out the lows, but doesn't say that it won't go test the lows, being that 114.36. You're at 115.87 as we speak right now. Volume today, 7.8 million shares. Remember, yesterday, total volume was 34 million shares. We'll see how the day plays out here. And that's what's going on inside the four index ETFs inside of the market. Let's go look at the weakness out here and see what weakness is doing. From weakness, we may find strength, and that is the financial sector, the XLF. Yesterday, breaking below those December 16th, the January 6th swing points, and doing it with gusto. Volume yesterday inside the XLF, 57 million. That was going against 36 from back in December and going into 46 from January out here. So what does that set up for the XLF? Well, it sets up an A to B equals CD to the downside. So if we go take a look at that pattern, the A point on this is going to be the high from December 29th. Your B point inside the XLF is going to be the low from January 6th. The C point is going to be the high. Let's see, that high on the 8th was 24.51. It's going to be the high on the 8th, 24.51. Your 1-to-1 A to B equals CD. That, in essence, is what took place yesterday, but it was wide price spread. Because we have to take a look at the close of the prior session, that's January 13th, most certainly was accelerated volume. If 23.10 does not hold, then 22.71 becomes your next area for the XLF to trade to. We'll watch to see how what the XLF also did. So just out of, let me just redraw the line in the sand out here. A trading session was October 30th. It was October 31st when we woke up and the Japanese finance minister said we got the printing presses all ready. We're ready to continue to weaken our currency, and that was where the market really broke out. Well, yesterday, what the finance, if you didn't remember that, you wouldn't be notated on the chart, but I do remember that very specifically. What price has done is it's come back to that breakout area. Now, albeit with more volume, that level still has held out there because there was only 34 million shares on that, really 38 million shares on the breakout on October the 31st out here. So that is potentially a level of support. If this level again fails, you're looking at 22.71, but there's really nothing to stop it from trading all the way back. This is the XLF specifically, from trading all the way back to its October 15th swing point. Now, that being said, let's go take a look at a couple of the equities inside the XLF. What was it that was moving to the downside out here? I think it was Goldman Sachs was one of the equities moving to the downside. So let's go take a look at Goldman Sachs, see what it is doing. It's slightly trading to the downside, but did so with gusto yesterday. So what Goldman Sachs has done, no, it's not done it yet. Let's put this up here. So Goldman Sachs, probably the first release of information, or at least one of the equities inside the XLF. And what I'm referring to is the swing point from the its swing point low, which is October the 16th. 7.8 million shares are down there. The top of that swing is 176.29. So far, the intra-session low is at 177.50. So Goldman Sachs will, because of it's got a nice weighting structure inside of the S&P, I'm sorry, inside of the Dow, Goldman Sachs will give us a pretty decent piece of information with regard to the XLF. You got JP Morgan as well. Let's go see. That's really what started the firestorm yesterday. Let's go see if JP Morgan is back to that October 16th level. Yes, so JP Morgan, in its case, it actually is October the 15th. So just 1 day difference between JP Morgan and the Goldman Sachs. Now, JP Morgan still trading inside that swing point. It really says that the lows from October 15th ought to be tested. That price point is 54.26. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's turned just slightly positive, up 8 points. S&P is down a point. The composite is up 16. Russell is up 8.5. What is on fire this morning is the DAX. The DAX is up 230 points. The DAX is actually, let me turn off a couple of things here. Give me a moment to turn off the profile. Come on, edit the chart. Give it to me. Give it to me, baby. Sock it to me, baby. There we go. I don't need that. Okay. If we take a look at the DAX, let me put it's tackling its swing point high. So its all-time swing point high is what it's doing. That's the December 5th level. So it's not there yet, 10,087. That's going to be tagged. Now, I don't know that it'll be tagged today. It's another 40 points higher from where it is trading as we speak right now. But the DAX inside that swing point, I wish I had volume there. You know, anytime you close inside a swing point, what it does is it absolutely says, you're likely to go test that high. If you're trading it with volume, it says you're going to test it high. Now, in the case of the DAX, if it is trading into it with volume and it busts it out, it's a huge A to B equals C to up pattern inside of the DAX. So we want to be paying attention to what's going on inside the world markets out here. If you want to take, didn't mean to do that. What I did was I meant to give you the A to B equals CD pattern. Is that off now? Yeah. So the A to B, the potential A to B equals CD pattern inside of the DAX will take you up to a price point, a minimum price point objective of 10,957. If it closes above 10,087, again, that's another 40 points higher. That would also be a large move. Now, the DAX has had quite a move. We'll take a look at the movement from low to high here, 96.37. I got to do that. Can't do this one in my head. So instead, I'll just switch over here. So, oops, I got to switch back to this chart. Where can I do it? Right there. Okay. So let's see here. So the DAX at the low out here today has been 96.37. Come on, 96.37. 96.37.33. And the high so far has been 10,049.45. So the actual movement, oh, come on. Can't believe I did that. Minus 10,049.45. So the actual 412-point move inside from low to high inside of the DAX today. And you're trading right now at its session high. So the DAX is absolutely going after that high. We'll see if it takes it out, and it takes it out with volume. What's the ETF for the EW? What would it be? I don't know. Maybe somebody in the den knows what the ETF that is traded that is that mimics the DAX. Just maybe so that we can get some kind of volume. EWG. Thank you so much, Basil. Appreciate that. So let's go take a look at the EWG out there and see what kind of volume is behind this move so far today. So far this morning, not really much. EWG. Now that's Germany. That was Germany. Well, yeah. So that's so wild. How about that? We take a look at the the EWG. It's just going to be based on the holdings that are inside there, because it's nowhere near the December. That's nowhere near the December 5th high out here. Interesting. In any event, the DAX is so. Let's take a look at. Let's continue looking at the markets out here. So we've got that. That's what I see as one of the bigger movers. You've got gold. Gold's up at $25 right now, so it's trading at $12.59. If we take a look at gold, let me see. Is this chart here populate properly? There we go. So if you take a look at gold, what we know that gold has done, it's busted above that swing point, $1,239 on December the 9th out there. Yeah, very different chart. If we take a look at gold out here, it's 1-to-1 A to B. So what gold has done, this is kind of interesting. Let me pull this back a little bit further out here. It looks like it's made. Okay, so what's interesting here in gold is if you go from that swing point high that we've been using for our trend line, that is July the 10th out here. That's up at 1347.30 down to the low that was put in here. That was on November the 7th. You go from the high to the low, the 0.618 retracement level, 1265.10. The actual high that we've seen so far today has been 1264.60. So it could be a level of resistance, clearing that 1265. You've got your 1-to-1 A to B equals CD at 1274, but I would say clearing 1265, and you're coming into it with a wide-ranging bar. So today's bar, assuming that it closes like this, up towards its session highs, that's the assumption that we'll go with at the moment. That says that when you come into a level of resistance or support with a wide-ranging bar, it says you're going to go to the next level. So the next level inside of a gold takes you up to the 1303-ish type range out there. 1301 is 0.786 retracement off of that set of swing points. So that's what's going on inside of gold. Let's go take a look at silver. Out here, silver's up 9 pennies. So silver is really still trying to just tackle. How about this? Silver still trying to attack resistance at 17 1/4 out here. That resistance really has been in place, began October the 30th. Silver needs to get above that level. Look, it is folks moving into gold versus silver because of all of the major fluctuations, and they are major, going on inside the currency markets. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Wild rides in the markets out here. Dow's up 56 now. S&P is up 4. Composite still slightly red. The Russell is back 4 points. DAX up 240 points as we speak right now. Gold's up 23 bucks. Silver not doing a whole lot. Light sweet crude up is down 26 cents. Let's go back to the got to stay in focus in on the currency market out here. So let's go back and take a look at the euro. Let me go switch back. We'll take a look at the live chart. That way we're taking a look, and that might delayed 15-minute chart. We're going to take a look at the euro in the futures market, the key level, which it's breaking through right now in a bad way as far as the euro. It's breaking through now. The swing point we're looking at, I've got a quarterly chart on my screen out here, and what you can see is the swing point that it's up against. This would be a daily, a weekly, quarterly. It's going to be easier for you to see it on my screen. The number to be watching today is going to be 1.1661. You're at 1.1619 as we speak right now. And the reason is because that's the last swing point that's out there, and you close below that on the daily chart. No, it should be a fairly wide-ranging bar on the daily chart that would be taking out that swing. You can see for the quarter back here, for an entire quarter, there was not much movement inside that swing point area. And this is back in 2005, by the way, October. So it was October, November, December in 2005 that the swing is up against, because there's no horizontal levels of support. So breaking through this area here, what that's going to do, that's going to continue to put strength inside of the U.S. dollar index because of the 67, 68% weighting structure that the euro has inside of that index out here. So key level of support that the euro is up against. I have no idea whether we'll break through it or not. What I can tell you is it's trading below it as we speak right now. That's putting some strength inside the U.S. dollar, and of course that is putting in. That is why light sweet crude is unable to hold its highs, its little bounce that has taken place thus far in the marketplace. If we go back and from a currency standpoint and we take a look at the euro, Japanese yen, this is off big time. So big wide-ranging bar now coming into its swing point out here from October the 16th. Remember, our markets made a low October the 16th. This is a directional currency pair here. The markets will trade in the direction of this currency pair. That is the euro against the Japanese yen. The Japanese yen here being the base currency on that cross pair. Now, you're trading into that swing point. Just to kind of put it in perspective, the strength of this, it's not a tick for tick. It's not a pip, I should say, not a pip for tick type of a correlation, but it is a directional correlation nonetheless. So we have here is you've got the euro Japanese yen well beyond it, just kind of sliced through the 1 to 2A to B equals CD to the downside. There was the potential, because the hammer candle that it created yesterday, that the euro Japanese yen was going to go ahead and put in a low out there. That is clearly not the case. You're trading inside that October 16th swing point. That says you're very likely to go test the lows, 134.14. Will that be the end of the move? I don't know. This thing could turn into an expansion of set of swing points out there, which would continue to put pressure inside of the market, but without seeing any kind of reversal here. Now, it is in the extreme, and I do mean extreme, oversold condition. If you take a look at that 14-period RSI here, and I've got things that have just kind of frozen, so that's not good. There's just so much activity going on in the market that it is just freezing up my system out here. If we take a look at the euro-Japanese yen, I'm trying to pull back to see on a daily chart. That's what's on my screen here. When was the last time that we were down at this type of oversold reading? Take a look at that 14-period relative strength indicator, and the answer is going to be, I know we can find it, it's going to be all the way back here, and that was in December of 2011 when it got down to a reading of, it looks like 18.96. That's how low it got. Maybe to get lower than that, 15.29. December 30th, 2011. So we are down into that overbought condition. Now, as I pull this chart back for you to take a look at, now we can kind of focus in on that area here. So we know that oversold reading, what's that? I said it was 2011, right? I see one back here. I think they got down to an even lower low back in May of 2012. No, it didn't really get all that. Let me pull this back just a tad further. I guess the point here that I was just really trying to drive home. There we go, back in, that's 2012. The point that I want to make to you is just simply the mere fact that the stock market correlates directionally to the euro-Japanese yen, and therefore we just simply need to be paying attention to it. But as we speak right now, there is no bottom. Well, the bottom that's in sight is going to be the test of that swing point from October 16th. So we'll see what happens there. And in the currency pair, in the currency world, we looked at the euro. We looked at the euro-Japanese yen. Let's go take a look at the Japanese yen all by itself out here and see what it is doing. See if there's any kind of reversal signals or anything along the lines here. It, too, made a little hammer candle yesterday. Now, it has not been tested, the low of which has not been tested. That was up against a pretty good area of support. So the Japanese yen, with regard to the U.S. dollar index, up against the December 16th levels, 115.57, ought to be decent support. You had a nice big bullish engulfing candle on December 17th. Yesterday, you had a hammer candle that was not taken out. This may be the area where it finds its support out here. That's on the Japanese yen. Let's look at the Great British Pound as well. See what it is doing out here. No reason for me to put the Swiss franc against the euro or the U.S. dollar because, I mean, other than just for a glimpse of what a $25,000, $35,000 move was, somewhere between there, to the downside, what that looks like in about a 3 or 4 or 5 minute period of time out there. But otherwise, there's really nothing else to look at on the chart. Inside the Great British Pound, it's doing a pretty decent job of holding its lows. It does look to me like the Great British Pound here has formed at least an intermediate term bottom. The bodies of the candle have gotten fairly small out here. That's never really a good bullish sign. When you're just coming out of an oversold condition. Little hammer candle on January 8th, little bullish engulfing on January 9th out here. Still beginning to make and form higher highs and higher lows out there. So it does look like the Great British Pound has got further to go in its bounce step out there. Some things that are moving to the downside. Let's go take a look at Priceline PCLN. Let's go take a look at it. Priceline right now is trading out at 1,024. It's back into the October lows. October 13th is when it made its low. That had volume down there of 1.8 million shares. You've done 319,000 shares in about an hour in 45 minutes of trading. So it's coming in there with similar style volume if, in fact, the volume were to keep up, which it won't or shouldn't. So therefore, you've got Priceline. Let me see. Has it tested the low? 1017.28. And the low today, 1016.10. So Priceline could be, it's all going to depend on where it closes today and what kind of volume. So in the case of Priceline, we'll just put a blue line across the bottom of my screen. 1017.28 is the number. And if it can do that on less than 1.8 million shares today, you'll have a rejection of a key stock inside the NDX 100, a test with lighter volume. In fact, let's go take a look at Apple, AAPL. Let's look at Apple and Google. Actually, I think I have the top 10. They were the top 10 holdings a month or two ago, so we'll go take a look at that. Now, in the case of Apple, what Apple is doing here this morning, Apple is tasting. It's doing a little wine tasting. Apple is trying for its swing point from January 6th. That January 6th swing point at 65 million shares. You've done 17 million shares. This morning or so far this morning, it has not touched the top of that swing point. The top is 107.43. The low here this morning, 107.54. So 17 million times 5. So it's coming in pretty hot. It's if the volume were to keep up this pace. But let me switch back to a chart here, or I mean a page where I believe I have the top. Had at one point in time the top 10 holdings. Looks like that's gone. It was, or at least it wasn't on that page. Let me try one more page here, see if I can find it. I think it's here. Yeah, we've got Apple, Microsoft. So let's go take a look at Microsoft, Apple, Microsoft, Google, and Facebook. So a couple stock charts that we haven't looked at, or I haven't looked at here for a while. Let's take a look at the daily chart here. So Larry's covering some shorts on his bonds. Let's go take a look at Microsoft. So Microsoft right now trading down into the the December 17th swing point low. That's got volume there at 34 million shares. You're down with 7 million shares. Again, pretty decent volume as we speak right now. Any close above the high of 45.95 will be a rejection of a swing point with price and volume. That's on Microsoft. In the case of Facebook, let's go take a look at Facebook. She's trading off $1.14. I mean, $1.14. What is this trading into? A swing from December 16th. That swing had 31 million shares. Yeah, you're down with a pretty decent volume inside Facebook. That's going to go. It should at least go test that area. I'd have to say that would pull me. So the swing here again is December the 16th. That had volume of 31. You're down with 10 million shares. The low there is 74.59. 74.59 ought to get tested out here. If we take a look at what else, Intel's up 42 cents. Let's go take a look at Intel. That's the number 5 holding weighting structure inside of inside of the NDX 100 out here. So Intel has bounced off of its point of control of its TAS market profiles. It's tested the January 6th low. It looks like it's tested it today. That had the top of the swing at least, 36.23, 30 million shares. It's done 8 million shares here this morning. Just really been consolidating and trading sideways. In the case of Intel, certainly not breaking down. Intel had a nice day. This wide-ranging bar with volume, this breakout back on November 20th, seems to be stabilizing any kind of downward move inside of Intel. Intel reports tonight. Thank you, Fletch, in the Tiger's Den. So at this stage here, it's not showing any kind of weakness, and it's got that big volume bar for it to deal with. Let me move back and see what's going on inside the market. So now the Dow's up 23. And the reality is here, folks, with regard to these gyrating markets, with regard to what the Swiss National Bank did with regard to unpegging its currency with the euro out here, we've got lots of wild swings inside of the market. If I take a look at the futures contract, which I like to use in order to be able to gauge where price is headed to, what I can tell you is that on the 120-minute chart out here, the ideal pattern setup for a potential bottom, the ideal pattern setup would be a move down to about the 1957 level. You're trading at 2004, so that's a 40-point move to the downside inside of the ES Mini. Now, what do I like down there? I'd like to see one big swift move to the downside. I thought we might get it here this morning after the initial shock wave that went through the markets. But no, we haven't gotten that. Why? Because you've got a 1-to-1 A to B equals CD. That would complete down to that level. Depending on how it does it, you could get to that 7th inning stretch inside the Chapman wave down there. We're in the 6th inning where price bounced. You would get down below a TAS market profile support level. So that's what I'm keeping my eye on, is that 1957 level. It doesn't look like that's what's going to hit it today, or that it's going to hit it today, but it's only 10:46. Maybe it's just waiting for Basil. Could be just waiting for Larry to come on and do his show. Maybe it's Daryl Martin. Maybe it's David White. Maybe it's Tom. Heck, it could be. Maybe it's even Andy Heck. Of course, Andy's only got it for about 15 minutes or so during his show. But at 1957.50, at this stage of the game, really is a target out there that we should all be looking for and watching. That's on the ES Mini. And I can put the other time frame charts up here. I can put it up for the Qs as well. I cannot get forget about that count to the downside, but I cannot get a gauge at this moment as to what the market really intends to do out here. If we take a look, it's doing pretty well considering the huge move. Quite frankly, it's doing very well considering the huge moves that we have seen inside of the currency market out here. So that much I can say. With regard to where was I going to go with this next for the next minute? With regard to went from the NQ. Well, let's just go take a look at a couple of stocks here. Let me see what I can ferret out that we might not order. Let's go take a look at Sherwin-Williams. That's up a couple of bucks here this morning. Nestle's up a nice 4.5%. But if you take a look at Sherwin-Williams, Sherwin-Williams trading into its most recent, its all-time high out here from January 9th. That's got 970,000 shares. You're up with about 200,000 shares so far this morning. The bottom of that swing is 271.01. You're trading at 271.92. Looks like Sherwin-Williams, which is a great-looking stock chart, is going to be headed back towards its highs out here. Well, I guess if Andy's on the slopes, he's not doing his show then, huh? If we take a look, so that's what's going on inside of Sherwin-Williams. Let me see here. Moving to the downside with conviction, Best Buy. Best Buy has got 20 million shares as we speak right now. That's trading off about 14%. It's got some really big monster volume inside of this equity. It's trading into where it last, in essence, broke out of. The breakout with wide price spread accelerated volume was on November the 20th. There was 26 million shares to the upside. This has got 21 million shares to the downside. Nonetheless, that low has held so far in Best Buy. Because I consider that breakout to be a couple of trading days back, and it happens to be a swing point, which is November 18th, and that's a 34.37. It's possible that Best Buy may just consolidate between the $34 to $40 level. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 5, S&P down about 3, Composite off 14. Let's go out to Spokane, Washington, to James. He's listening to us on KSBN. James, how you doing this morning?
Pretty good. How about yourself, Steve?
I'm doing just great. Thanks so much for calling. You wanted to take a look at the ETF UNG, which tracks the natural gas contract. Tell me how I can help you.
Well, I'm just thinking about looking for a entry to go long.
Okay.
Just wondering what your take is on it.
Your best entry to take a long inside of UNG. I'll give you the information, and you can decide what to do with it. Your best entry inside of UNG that I would say would probably be the $3. You're not even seeing what I'm looking at another screen thinking that you're looking at it. My apology for that. Let me put UNG up on this screen. I'm looking at the natural gas contract out here because really the trade inside of UNG should be based on what is going on inside of that contract. But let me do this. Let's put the TAS market profiles out here for you. What you can see, because there's a similar correlation out here, so that really helps. So inside the UNG, what we can see is that it's run into resistance of its TAS market profile high out here, and that's right at a price point of 1688. That's the number. So ideally for you, if it doesn't break through this level and you want to buy this on a pullback, $15.64 would be the number for you to take a look at. What I throw out to you, because I don't know the answer to this, what I throw out to you is the following, and that is this chart right here. And this chart is a 11-year historical average of the natural gas contract, and it shows what its 11-year trading pattern has been. And its 11-year trading pattern, I don't know about coincidentally, was that it would form a initial low right around February 13th and 14th. It fulfilled that objective clearly. And then it says that right around the trading session of, I believe it is the 22nd, January 22nd, that's when it really peters out and it makes another move lower. And this is the move here that maybe you want to consider. So, all I can do is supply you with the data. Your best possible spot to take a trade inside of UNG at this stage of the game is going to be at that market profile low, that 1564. I would say if you see that level fail, you see price start closing below that, then the seasonal pattern that you and I just took a look at is in play. And at this stage, I think that it is in play. And it says that you don't really see any kind of significant low inside of natural gas until the February timeframe, the middle of February, Valentine's Day to be specific. So that's what I would be taking a look at. Does that help you at all?
That does. Helps a lot, Steve. I appreciate it.
Hey, no problem. So best of luck to you on that trade, and thanks so much for calling in and listening.
You bet. You have a good day.
Okay, that was James in Spokane, Washington. So, folks, as we come into the break here and we switch over, we got in the on-deck circle is Basil Chapman. So hopefully I've got him on to first base. And then behind him, we've got Larry Pesavento. He'll try to knock him over to third. Maybe we get a squeeze bunt, and Basil can make it to home while Larry moves on over to second base. And Daryl Martin sacrifices himself to score out there. We've got the Dow's trading off 30 points. The S&P is down 6. If I take a look at what's going on inside the VIX index, let me see this. Still every indication as I take a look at these 6 quadrants here that tell me that the market is getting ready to form a significant low out there. Only time will tell. Folks, have a great Thursday. I look forward to seeing you bright and early tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.